Hi and welcome back to the channel, hope you're doing good. Today's video will be going over 3 UK stocks which I think look like good buys at current levels. If you enjoy this video and get some value out of it, please drop it a like and subscribe to the channel. Stock number 1 is Pets at Home, who operate within the pet care business. They operate through retail, vet group and central segments. The business unit offers different products and services. The retail segment includes pet products purchased in store or online, grooming services, pet sales and pet insurance, and the vet group segment includes first opinion veterinary practices and provision of 24/7 pet healthcare advice through its telehealth service. The company operates through brands including Pets at Home, Vets for Pets and The Groom Room. With families now more than ever opting for furry companions, this company will always have customers come through the door through any economic environment. When looking at the 5-year share price performance, the stock has been a really strong performer, still up about 91% at current levels. Through 2022, the share price has been following the overall market trend, currently sitting at about £3.12 per share. This gives the company a market cap of about 1.56 billion, a PE ratio of under 13, and still offer a very respectable dividend, currently yielding about 3.14%. Pets at Home have been growing revenue in the mid-digit range, showing consistent growth. Even during periods of lockdowns, the earnings still show really resilient growing earnings. From a balance sheet perspective, total assets are sitting at 1.7 billion compared to total liabilities of 730 million. Cash at the bank is 101 million, the highest it was in the last few years, with total debt growing from 170 million in 2019 to 508 million last year. Pets at Home are currently having a bit of a shake-up, as current boss Peter Pritchard is departing with Lisa McGowan coming in from Sky UK as the chief exec on a very nice $580,000 per year annual salary. Recent earnings show an above forecast jump in annual profits, driven by strong demand across the pet care market. Revenues at the retail and veterinary business came in at 1.32 billion, up 15.3% on the previous year. Retail sales rose 15.8% on a like-for-like basis up to 1.21 billion, while the vet group revenue increased 17.1% on the same basis to 108.4 million. Underlying pre-tax profits surged 65.3% to 144.7 million, ahead of expectations which were 141 million. Current Chief Exec Mr Pritchard notes that despite another period characterised by significant and evolving external challenges, our performance this year has been noteworthy, delivering record sales, profit and cash flow. We are well placed to accelerate growth and market share. And we can see all these positive mentions and numbers across various metrics from the results presentations, with all areas showing growth. Pets at Home operate via an omni-channel model, allowing different segments to interconnect. 60% of their growth has come from market share gain in the last 5 years. They're estimated to have a 24% market share within the UK pet care market, which has been growing at about 10% and a pet population of 35 million. Their online presence has about 19% market share, food 21%, accessories 49% and veterinary 19%. Average customer spend has been compounding year over year, showing steady growth from £148 in 2020 up to £153 in 2021 and £159 in 2022. Net cash is sitting at about £66 million, with £70 million being invested in the business in full year 2022. Really low leverage of 0.4 times and good liquidity of 366 million, which supports the company on its long-term growth initiatives and allows a progressive dividend back to shareholders. Tip ranks have 6 ratings on this, with 5 buy ratings and 1 hold, with an average price target of £4.73, giving close to a 52% increase at current levels. Stock number 2 is S4 Capital. S4 Capital are a UK-based advertising agency company which provides digital advertising and marketing services. The company produces digital campaign films, creative content, platforms and e-commerce for homegrown and international brands. They operate in 3 segments, which are first-party data, content and programmatic. Looking at the share price, even after a total shambolic 2022, the stock is still up 104% over the last 5 years. Current price is around £2.59 with market cap of 1.44 billion. S4 Capital are still a loss-making company, but what makes this company investable is the rate of growth we can see from 100 million in 2018 to just over 700 million in 2021, and it doesn't look like it's going to stop here. The balance sheet shows total assets of 1.68 billion in comparison to 884 million in total liabilities. Cash and cash equivalents as of the end of last year were 301 million and total debt of 353 million. The man behind this company is Sir Martin Sorrell, who is the founder and executive chairman of S4 Capital. Sir Martin was CEO of WPP for 33 years, building it from a 1 million shell company in 1985 into the world's largest advertising and marketing services company. He left in 2018, leaving with revenues of 15 billion and profits of 2 billion. Now he has the challenge of competing against his own Frankenstein, but previously building such a successful company shows the pedigree this man has. S4 Capital reports a 99.4% surge in billings and preliminary results to 1.3 billion from pro forma billings rising 67.1% to 1.4 billion. The London listed firm said revenue was ahead by 100.4% for the year ending 31st of December at 686.6 million, while gross profit grew by 89.8% on a reported 560.3 million. Operational EBITDA grew by 62.4% to 101 million, with the company's operational EBITDA margin falling 3 percentage points to 18%. S4 Capital say that was driven by investment in major new clients, new areas of organic growth and its investment into the management infrastructure, with the margin improving from 14.5% in the first half to 20.6% in the second half. Adjusted net per share rose 13 pence from 7 pence in 2020. It recorded an operational loss of 42.1 million, swinging from an operational profit of 8.1 million in 2020 after charging 136.9 million over acquisitions, amortisation and share-based payments. The firm's operating loss also narrowed to 83.5 million in 2021 from 87.9 million in 2020. Growth across each area shows Americas with 38% growth, Europe, the Middle East and Africa has 64% growth, and Asia Pacific with 49% growth. Net revenue in the three business areas show year-over-year growth of 47, 35 and 97%, with the only real negative information on this page being that the content segment had negative EBITDA and operational EBITDA margin down as well. Guidance provided from S4 Capital are that they expect 25% like-for-like growth, steady year-on-year EBITDA margin improvement, noting at the bottom that 2022 has started really well and expecting another strong year of growth. Tip ranks have 4 ratings on this, all with a buy rating. Average price target of £6.25 gives it a whopping 140% increase from current levels. Stock number 3 is a company which has been evident in nearly every high street across the UK, and this is WH Smith. WH Smith is a travel retailer for news, books, convenience and technological accessories. The company sells a range of products serving customers in travel locations. Its segments include Travel UK, North America, Rest of the World Travel within their travel division and high street. The travel locations are mainly in airports, railway stations, motorway services and hospitals, and the company really relies upon the general public being out and about and on the move. WH Smith has been heavily affected by the COVID lockdowns due to being heavily associated with travel, and the share price reflects that. It's down nearly 15% in the past 5 years and is still trying to find its feet in order to move up. Current price is £15.20 per share with a market cap of around 2 billion. Revenue and earnings have been evidently poor, reporting negative earnings in the last 2 years. However, 2022, being the year that I thought 2021 was going to be for travel, I fully expect a rebound. The balance sheet reports that is about 1.35 billion in assets with 1.17 in total liabilities. Cash and cash equivalents were 130 million as of last year, with total debt soaring up to 885 million. We do have good news to report on this stock as WH Smith swung to a profit for the half year as air and rail passengers returned after COVID lockdowns. The company posted profits of 14 million for the 6 months up to February 28 compared to a loss of 19 million last year. Total travel revenue in the 8-week period to the 23rd of April was 114% higher ahead of pre-pandemic 2019 levels. They also note that they don't have any operations in Russia, Ukraine or Belarus, but could take a hit from the rising shipping costs. They have 125 stores lined up, including 63 in North America and 31 in Spain. Taken from their results presentations, it's noted that they're on track to deliver meaningful profit for full year 2022, with substantial growth opportunities in North America and globally. Total 6 months revenue of 608 million is up 45% from last year, with all areas of travel echoing the strong rebound within the travel industry. High Street was flat for the year. And as earlier mentioned, WH Smith have turned it around from a 19 million loss to 14 million profit, with North America being a strong performer with 8 million profit. The rest of the world is still loss making by 1 million. It's up from a 6 million loss the prior year. The pipeline of new stores has a target pipeline of 350 stores by 2024, up from 280 stores in 2020. TipRanks has 4 ratings on WH Smith, all buy ratings, and an average price target of £19.35, giving a potential 21% increase from current levels. And well, that'll sum up this month's picks. I hope you enjoyed the overview into these companies, and I'll catch you all in the next video.